and get elevated through the homeownership process. But if you know that you have some extenuating situations that we need to resolve before we send you to a bank, we want to definitely try to do that right first. We want to try to make sure that we understand, is there anything else in specific that you need support with, and then support you with that to get you prepared to go to a financial institution. So we do both to help you. Go ahead, Joanna.
Got you. So yes. So if you are somebody that knows, like, think about it. So credit, if you think that you are having some credit issues, income issues, asset issues, feel free to reach out to a HUD consultant so you can figure out what exactly is it, where am I, and what are some things that I might need to work on before you actually start the pre-approval process. Because once you start the pre-approval process, we're going to run credit, okay? So before we start running credit a million times, let's go ahead and try to get yourself together first, okay? Now, here's some things that we're looking for. Credit. So I'm going to make this interactive, guys, so you can just pop your questions into the chat. So what do you think is the minimum credit score required? Just pop some answers down there in the chat. Don't be afraid. Okay.
I'm going to give y'all a hint. It's above 400. No. I literally had somebody to call me with a 450 credit score. I'll go over that later, though. Yeah. Don't go below that. Yeah.
Yeah, no, we can't do 400.
This is good. 580, 620, 640, 620.
Okay. Cool. So we got a few. So we got 580, 620, 640, 620. Okay. So we can go as low as a 580. Now, there are other lenders that might even go lower than that. You know, now, should you do it at a 580, though? Probably not. Reason being, the interest rates are higher. It's going to cost more at that rate. So you might want to save, try to increase your credit score to at least a 640. At the 640, the interest rates are going to be better, and you might qualify for more down payment assistance programs at a 640. Now, there might be some that you can do under 640, but for the most part, most programs will require you to have around a 640. Now, what are some things that we're looking for on your credit report? So we're looking for a certain amount of collections. So typically lenders don't like more than $2,000 worth of collections. Now, if you are somebody that has more than $2,000 worth of collections, it's not the end all be all, you know. So basically we might apply a payment, which will affect your debt to income, or, you know, we'll try to figure out from there what you need to do next. But for the most part, that's what we're looking for. We're looking for collections. We're looking at to make sure you have a sufficient amount of credit. So typical rule of thumb is 3 trade lines. So 3 trade lines. Trade lines is just different accounts of your credit. So whether it's credit cards, car loans, student loans. Okay, so we're looking for a mixture of different types of credit. Now, if you don't have 3 lines of credit, that don't mean you need to go out and necessarily get more. But, you know, just let your lender, you know, do their thing. Okay. So for the most part, but that's typical, 3 trade lines. Now, credit report. So we're looking at your credit history. We're looking at collections. We're looking at, depending on if you might have late payments on mortgages that you already have, we might be looking at that. But for the most part, if we can go down to a 580, there are certain ways around different type of credit derogatory marks. Okay. Well, we also might be looking for bankruptcy, judgment, foreclosure. Okay. We all have seasoning requirements. Seasoning requirements means that you have to wait a certain amount of time before you can get another loan after you've had, you know, maybe like a bankruptcy or a foreclosure or something like that. Okay. But for the most part, we can go as low as a 580, but you really want to shoot for at least a 640. Now, income. Do you have a job? Now, are you working?
You got to have some income.
Do you have a job? Okay. Now, if you don't have a job, we can use other forms of income. So we can use child support. We can use pensions, Social Security. You know, there are other forms of income that we can use, but for the most part, we're looking for work history. Okay, if you're somebody that's W-2 employee or even self-employed, we're looking for for the most part, a 2-year work history. Now, do you have to be on the same job for 2 years? No, but we are looking mostly for like at least a 2-year work history. Now, as far as self-employed people go, typically we were going to need 2 years tax returns. Mm-hmm. Now, this is for the traditional lending route, okay? So typically we want about 2 years tax returns, or if you've been in business for at least 5 years, then we might only need 1 tax return, okay? And that's a certain conventional program that we can do. Now, the thing that trips self-employed people up, is anybody in here in the chat self-employed?
I'm dealing with a situation like, I know what you're about to say, because it's one of the best, it's the most overlooked situations, Shavonna, that people do when it comes to being an entrepreneur. And I'm gonna let you say it. And then I got a story to tell behind that, because this is real information here, guys, especially for anyone who's self-employed. It's gonna be very valuable. What's their biggest issue?
Right. So self-employed people, y'all don't like to pay taxes.
No.
So
write down everything.
You write out all your income. Now, if you told the IRS that you made negative $30,000 last year,
right,
and then try to come buy a house,
it ain't gonna work.
Return like, ma'am, you made negative $30,000 last year. You don't have income.
Yes.
Right? So we have to show income. Now, if you know that you're looking to purchase a home and you're self-employed, you need to start about 2 years early. Okay, so you need to let your tax preparer know that you are trying to purchase a home, so they don't write all your income off. And then you should also start getting on a payment plan with the IRS. So typically we just have to show 3 months of payments to the IRS if you owe the IRS. If you owe for the previous year, so let's say you didn't owe for 2019, but you owe for 2020, right? Then we just have to show that 1 month of payment being made to the IRS. But if you owe for previous years, we want to see like 3 months of payments made to the IRS. So that's not terrible, guys. Just get your tax returns together and make your payments to the IRS. Now, that's for the traditional route. Now, if you are somebody that's like, no, I'm not doing it, we do have bank statement loan options, okay? So basically, we will take your last 12 months bank statements, we'll look at how many deposits you have, and we come up with the income from there, okay? But if you're going the non-traditional route, now you're looking at least 10 to 15% down. We can't do the 3% down program, 3.5% down programs. You don't qualify for all the down payment assistance programs and things like that, because this is a different type of loan. This is a special private loan. So it doesn't have the same backings as some, Fannie and Freddie and FHA. It's not government backed. It's from a private lender. Okay. Mm-hmm. So like, for instance, when COVID hit and everybody went into COVID forbearance and stuff like that, you might not qualify for those programs because you don't have a government-backed loan. So those are things that you have to think about, weigh your options when trying to figure out lending options for self-employed people. Now, for the people that's not self-employed, W-2 income.
Before we move on, Shavonna, to the I want to just tell you all a very quick story that just happened with a young lady that we're working with. First, this young lady, she's a part of the Chicago Housing Choose to Own program. And so they have a phenomenal home ownership program where a person can be integrated in once they save up a little bit of money. Now, she's a entrepreneur. She has been over the past 3 or 4 years. And so she knew someone had already told her, look, you got to show an income. So she showed an income for 2019, and she showed a little bit for 2020, but because they need the last 2 years and we were coming up on April 15th, they required that her taxes be done. So she rushed to do them, and she used all these write-offs. Now, we had in a pre-approval for her already of $175,000. Well, that $175,000 went down to $100,000 because she got her 2021 taxes done, had to submit those, and because she had reduced her income and put so many write-offs in there, it lessened her ability to be able to get in the affordability that she wanted. That was a difficult pill for her to swallow. But you have to, just like she said, it's so important that you have a good tax consultant, have real conversations with them. And yes, you might have to pay taxes on that for that year, but will you benefit by having a home, something that's a legacy of love, something that you can stay with you and your family, your tree line, or that you use as a 401k plan over time, where you're investing into the principal, and you decide 20 years later, well, I want to sell this and take all your money and move to Hawaii, whatever it is you want to do. You have flexibility when you purchase real estate. When you buy real estate, you are creating wealth. So I want to commend every single person that is on this call tonight. Sadie, I see you. Marion, I see you. All these amazing people. Princess Austin, I see you. I see you here with a purpose, with a plan, and you're ready to thrust forward in this. And I will tell you, do not, under any circumstances, whether you're self-employed, whether you are on a program, like she said, SSI, disability, whatever it is, or if you simply are working your career, you have the ability to pull together and manifest this dream of home ownership. And don't let nothing stop you, regardless. If it's, you know what, you came to Shavana and you saw, well, it's probably going to be, 3 months for me, 6 months for me, or even a year. Do not get discouraged. Some goals are long-term and they are worth waiting for. But if you quit before you get there, and just another very quick story, because I capture everything and I capture these stories to memory because I want to be able to share real life experiences while I motivate and inspire other people to thrust forward into this dream of home ownership. There are only 42% of African-American families that actually possess a piece of land, that own a property. That is opposed to 79% of Caucasian families. That's a great big economic disparity. When you own land, that land typically, not always, but typically appreciates over time. And usually the market will shift. Sometimes we're in a good real estate market, sometimes we're not. The wealthy people say never sell your real estate in a bad market, right? So hold on to it and it's going to go back up. And that's been a trend that you can actually track, right? But when you do this, it's so many opportunities. Some people literally get their will, their transfer on death instrument, and they transfer that property down to their children over and over again. And then the grandchildren benefit from it. And then sometimes that person say, okay, kids, I'm going to teach y'all how to go out there and fish and build your own house, okay? Because mama going to take her house and she going to sell it so she can go own a condo and then travel the world. Whatever it is, it could be a great retirement plan for you as well. And that's how we have to see real estate and the benefits of moving forward into home ownership. That's the goal here tonight, right? My Turn to Own actually has their own in-house HUD certification training program, and they have a partnering organization. So they're there to look at everything before they even send you to a financial institution to ensure that you're successful when you get there, okay? In addition to that, they also have all of the counseling to help you to be able to prepare for those next steps. We just did, it's about a month or two ago, we got one of the first ladies off to her new home on the west side. It was tremendous. We're going to be showcasing that relatively soon. Shanaze just called me with more great news. We actually had the news to come to her home because this is worth celebrating. She's adding to that 42% deficit that we need to increase in those numbers. You're here right now for a complete divine purpose. And it is definitely to get this information and to let that be a seed sown into your heart, to feel encouraged and inspired to know that you too can have your own home. See, I love their name, My Turn to Own. Like, that's personal. That's me you're talking about. It's my turn now. It's my turn to get this. It's my turn to grow. It's my turn to have something to pass on. Or it's my turn to build wealth for myself. You know, but you can do it, because think about it. When you're paying rent to someone else, you are just paying rent to them, and you are consistently making them wealthy every single day. It's not going nowhere. When you pay your mortgage payment, and I'm gonna let Siobhan jump back in, that is going to pay that thing down and eventually off, and it becomes yours. And no one can take it away from you but yourself. Siobhan, add to that, girl. Tell them.
Yes. So, I mean, guys, everything that Nicole is saying is true. And not only that, you are stabilizing your housing payment. And I know everybody has heard about the interest rates increasing. And, you know, well, is now still a good time to buy? It's still a good time to buy, because historically speaking, the rates right now aren't that high. The rates can get higher. So you really want to go ahead and stabilize your housing payment for the next 30 plus years, because your principal and interest are locked in. It's not changing. Sure, your tax and insurance might change a little bit, but for the most part, your payment will stay around the same payment. Okay. So use this as an opportunity to stabilize your housing while everything else is going up. Okay. So I think that was a question. Did you still have a
Yes,
question,
ma'am.
or was this the question in the chat?
We do.
Okay.
We have Miss Austin with her hand up. Miss Austin, if you can unmute yourself.
Sure. Thank you. You actually, Shabana just answered my question. It was in regard to what you all anticipate the market looking like in the next 5 years, 3 to 5 years or so, with the interest rates going up. Do we anticipate seeing a street full of foreclosures? Is it going to be similar to 2008? Are there any predictions around, yes, right now is a great time to buy in comparison to, history. However, I'm wondering if we were to wait just a little bit more, are we going to come up?
So to answer your question, I don't think you should wait. The reason being, the rates are going to continue to increase, and you're not going, when the rates increase, that affects your buying power. Okay. So you're not going to get approved for as much when the rates are higher than when the rates are lower. Now, also, I don't see it being like 2008. The reason being, in 2008, mortgage lenders were under fire, okay, because they were doing practices that weren't, ethical and things like that. We have a lot of legal guidelines in place now. Like, we all have to be licensed. We all have licenses. We have to abide by certain laws. There's a lot of things in place where we're not in the same situation that we were in 2008. A lot of people have equity in their homes, okay? So back in 2008, people did not have equity in their homes. They were underwater, okay, because of bad mortgage lending practices. Now people can literally, why foreclose when you could just put your property on the market and walk away with a bag, walk away with $100,000. You get what I'm saying? So I can't really see a big foreclosure practice happening. The only thing that I might be able to see is maybe some people who couldn't afford, like their taxes went up because the property values went up. So maybe people's taxes went up, so maybe they can't afford the home anymore. But if that is the case, again, you could just put it back on the market, because the values of the homes are steadily increasing. And then not only that, with the way that the prices are now, we still don't have inventory. So I don't know if anybody has been pre-approved and is out there looking for a home. We don't have a whole lot of inventory. So until the inventory starts to pick up, then I really can't see, prices really going down that much. The buyer pool may shrink in a little bit just because, it costs more to purchase these homes now with their interest rates being higher, but I still don't think that we'll have enough supply to kind of offset that. Does that make sense?
That does make sense. Thank you for that. And sorry, I'm squeezing in a second question is, can you give an example of someone who purchased a home for whatever amount, if you can provide that amount, that'd be great, and then had that interest rates increase?
Sure. So I actually just did one on my Facebook page that I can go over really quickly. So I did an example where the person was they was pre-approved for $240,000 in January when the interest rates were around 3.5%, right? But now the interest rates are higher, okay? She tried to get a new pre-approval in April when the interest rates are higher. So back then she qualified for $240,000. Now she doesn't qualify for $240,000. She tried to buy $230,000 house now, and she doesn't qualify because the payment went. If she would have purchased this house in January for $230,000, that payment would have been $1,305. If now that she's trying to purchase that home is $1,535. So if she was maxed out at the top of her budget, now that payment is $200 more, and she doesn't qualify for that house anymore. Okay, so it affects your buying power in the sense that once the rates go up, the actual mortgage itself goes up. So the principal and interest went up $200 just from January to April.
Well, you know what, Shavonna, we've actually had people to lose affordability from when they were first pre-approved because the interest rate went from 3-point-something% to even 5%. And in a lot of cases, people could have avoided that. Like when you get a pre-approval, so apply when you know that you're ready to start going out and to really move things around. And I know that, you know, the world want to say, oh, it's a shortage and everything else, but I promise you, like in my particular case, I tell all my clients this one thing: we're going to find the perfect property at the perfect price that's in perfectly divine order for you. And regardless of their income, whatever they're approved for, we end up finding it, right? But sometimes what I see is that people deal with fear of moving into this next step, and they'll find little things to keep delaying. And then those individuals, I promise you, all the three that I can think of right now that was pre-approved earlier when rates were done and they still didn't start getting ready to do it, they're now going to be paying a lot more money. And no offense, Shavonna, but the money actually be going to the bank for the interest rate. When you pay less interest, right, the money is actually going to you to help you pay down the principal. I would rather put my money towards the principal so I can own it better and faster, which I encourage people as well. Every extra dollar that you get, you should have a happy principal payment day. Like you get some bonus at work, you be like, man, I'm about to take a big portion of this and I'm about to pay it down onto my principal balance so that you can pay off that thing faster and own your home, right? But these are really real situations. When you make the determination that this is what you want to do, you got to have a made up mind that is determined to succeed no matter what. And then you got to work with your team, with your financial lender, with your realtor to get out there and get what it is that you desire most to have. I'm not saying, oh, rush, get anything. No. But don't keep letting good things slide past you because you can't make a decision. Oh, I don't know, is this not? And you go back and forth. I'm working with a young lady today. I promise you, the first property that we were going to go get her, because as Shavonna said, you know, sometimes there's a lot of people applying for the same property, right? And so I told her she wanted this place. It was $240,000. It was really nice. And I told her, I said, we need to go $245 on this because I pulled up the comparative market analysis. I know that what they were selling for, and I had sold places over there. Said this place is sitting on 3 lots and it's gated. It's beautiful. Everything is new. With just some small things that need to be fixed in the house. I said, listen, we need to go above the asking price on this to get it. And so she came back and said, you know what? No, I decided I'm going $240. That's it. Now $1 more. That's okay. Because I did my job. I had given her everything. The proof from the comparative market analysis that it was going to, what it would appraise for potentially, and that it was worth going a little higher. And so naturally, we did not get the offer. And she was devastated because someone else came in. They looked at the same statistic, the same information, and they said, I'm going $10,000 over that. Now, Shavonna may be able to tell you that it's not a big difference in the price of $10,000 over the cost. And then the thing is this, when they get the appraisal, when that part happens, that house could literally come out appraised for $240, and they negotiated back then. but she walked away from it. But now it's months later, she still lives in massive regret for it because there's nothing we could do about it. It's nothing that can be done now that she didn't want to go $5,000 more, which is, I don't even know if that's what the price is on that, Siobhan, if it's $15, $20 a month to get what she really wanted with 3 pieces of land. And it was really fear that stopped her from making that decision. And now she unfortunately is living with massive regret. So when you feel connected to a place, then thrust forward in that. Trust your instinct, trust your gut, and do what you feel best with. You're going to get a home inspection done in that house, to have a good inspector to come through and check out the health of that house. Now, some of my reports for that could be, literally 40, 50 pages. It could be a long page because they pick up every small thing. Most of it, a small contractor can come in and do a lot of handyman work for you. Don't get discouraged by that. You get discouraged by something being really big issues. Like once I had a client, we were helping her get a home, and we found out the entire structure of the brick building was unstable. That's a major issue because if her house fall apart on her, that's an issue. That was something to be alarmed about. But I've seen people that say, oh, wait a minute, these, things are, the nails got to go in here, or the carpet got to look, the threshold is missing. Some of those are small things. And they're like, listen, that doesn't take much to fix. So have an open mind when you go into a house to see the infinite possibilities of what you desire it to be. Because remember, when they built that house for whoever it was, that was their dream that they were building. You have the ability to put a new set of lenses on there and go out and build this new opportunity for you and your family. So some work is going to have to be done that's specially catered to what you desire. I hope that helps. Siobhan,
Yeah, guys. So
add on that.
Yeah, go. I got you. Yeah. So yeah, guys, like if it's out there, you need to hurry up and hop on it, okay? If you really like it. Now, as far as income goes, so the way that we actually calculate how much you can get approved for is by your debt to income ratio. So really, we're actually approving you for a mortgage payment. And then based on what the rates and things are, we can kind of calculate how much house you can probably afford to based on where it's located. Because what is one big factor that can affect your pre-approval amount depending on where you live? Can anybody guess and drop it in the chat? What is something, depending on where you live, that might affect your pre-approval amount? Take a wild guess. Yes, Princess. So taxes, yes. So property taxes in the suburbs are usually much higher than property taxes in the city. And so can I share my screen real quick? I just want to show you guys. One second. Here we go. Can you guys see my screen?
Yes.
Yes.
Okay, here we go. All right. So this is a simple mortgage calculator that everyone can use on Google. All you got to do is type in mortgage calculator on Google. Okay. So let's say you're purchasing a $240,000 house, right? We're doing 3.5% down. The interest rate, let's say it's 5.5 for a 30-year fix. Now, are we buying this house in the city or the suburbs? Somebody throw it out. Where are we moving to? Give me an area. Give me a location. Give me a suburb.
Yes.
You said what suburb?
Markham.
Markham? Okay. So I'm not super familiar with
Put in
Markham.
about 7,500.
7,500. Okay, because I was going to use 6. So 7,500. Okay. Okay, so we're talking about, let's see. Now let's put in some homeowner insurance. Most homeowner insurance is higher than this. Let's put in 1,500. Okay. So let's see what our payment is now. $2,256. Y'all see that? Total monthly payment, $2,256. This is with $7,500 in taxes. Now, we move it to the city and buying the same house, $240,000. Y'all see that? $1,839. This person, $2,256 versus $1,881. Taxes can make a big difference in how much you get approved for. Interest rate can make a big difference. So 4.5, $1,739 versus 5.5. That's $100 over $100 difference. Okay.
Yes.
It's just the payment alone. So I put this up here. So let's say you are somebody. I'm gonna make y'all do a little homework real quick. So you guys pull out your calculator. If you're on your laptop, you can pull out your laptop calculator. Pull out your phone. Pull up a calculator. So let's say you make $3,000 a month. Okay. Now you make $3,000 a month. You have a $300 car note. So how much of your income is taken up by your car note right now? So 300 divided by 3,000. What is that? What percentage is that? Can somebody do the math and put it in the chat? So 300 divided by 3,000. What is that? 10%. Yes. So right now, your car note takes up 10% of your income. Okay. Now, let's say we can go to half of your income, right? So let's say we can go to 50% of your income for the loan. Right now, you only have 40% of your income left for mortgage payment. So somebody do 40% of 3,000. What is that? Drop it in the chat. %40 of 3,000. How much is that? So do 40% times 3,000. So 0.4 times 3,000. All righty, and there they come. $1,200. You can afford a $1,200 payment. Remember, that car note takes up 10% of your income. You only got 40% left. So you can afford a $1,200 payment. Now, let's go over here. Can you afford this $240,000 home in the city? $240,000 with $3,000 in property taxes. This is our payment, $1,881. Can we afford this home? So yes or no in the chat. We can afford a $1,200 payment. Can we buy this $240,000 home? No. Somebody said, heck no. Okay, so let's see where we probably need to be. Okay, so we probably need to find a home with even cheaper taxes. So we probably need to find a home with taxes of about 1,800. Nope, we still over. Let's see, so 170. Nope, still a little over. Let's see if we can decrease our shop around for some homeowners insurance. Still over. Okay, so then we probably need to be somewhere around 150. Okay, give or take a few dollars on the homeowners insurance, we might be able to, make that work. Okay, or maybe one more thing we might be able to do. Let's say we have cash saved. Okay, so we got enough for our down payment and we got enough for our closing costs. We might be able to do something with this rate here. So what people don't understand is when we say rates are high, that means one, the rate might be higher. The rate that you qualify for might be higher. It also could mean that rate costs more money. So everybody has a rate that they qualify for based on their credit score. Okay. So let's say based on your credit score right now, you qualify for a 5.5% rate. Okay. But we don't want a 5.5% rate. We want a 5% rate. Okay. Well, we might be able to buy down our rate. We might be able to pay extra money at closing in order to get a lower rate. So let's say we're going to buy a point. So I don't know if you guys have heard anybody talk about buying points and buying down a rate. 1 point is 1% of the loan amount. So if you're if your loan amount is $200,000, 1 point is 1%. So that's $2,000. Let's say for the 5.25 rate, it's $1,000, or I'm sorry, it's 1 point. So that's $2,000 to get that rate. So from a 5.5 to a 5.25 rate. Okay. So you might want to pay a little extra money, that extra $2,000 at closing, to get a lower rate. Now, something that you have to be mindful of, though, is does it make sense? So let's say we're at 5.5 right here, okay? So our payment is $1,208. Let's say we pay $1,500 because that's 1 point, $150,000 to get the 5.25 rate. Now we're at $1,181. You got to kind of decide if that difference in the rate. So from $1,181, what was our original amount? 5.5 and $1,208. Is that $30 difference? Does that make sense for you to pay $2,000 extra at close? I mean, $1,500 extra at close to get $30 off your mortgage. Okay, so that's the cost benefit analysis that you have to do. You know, maybe I don't want to pay $1,500. Maybe I need to buy a new dining room table instead. So I'll take the higher rate. You know, so I don't have to bring that extra money to close. Okay, so those are some things, some cost benefit analysis that you will have to do on your own. Okay, once you know how much your down payment and your closing costs are. So yeah, so here we go. So this person might be able to be somewhere around $150,000. Okay, for a home. Now, you got to figure out where that home is going to be based on $150,000, $1,800 property taxes. So that's when you reach out to your realtor to help you do that. Okay. But that car note took a large chunk of her income, right? That car note took a large chunk of income. So it might be a situation where maybe you need to, you know, maybe figure out how to pay that car note down or pay it off. Or maybe we need to figure out some other forms of income to increase our income so we can increase our buying power. Maybe we need a co-borrower. Maybe we need to buy the rate down. There are certain things that you can do to try to get more buying power. Okay? Now, so that's a little debt to income, you know, so we got credit, income, and then the last piece is assets. Do you have enough money for down payment, closing costs? How much y'all think, how much do you think you need to put down on the house? Drop it in the chat. $4,000. $3.5% to 20%. Are there any veterans in the group? If you're a veteran, drop it in the chat. 10%. Okay. No vet. Okay, we got one. Okay, so veterans don't have to put 0% down for a home. Now, just because we say 0% down, you still got closing costs. So the things that we actually have to pay for: down payment, closing costs, and your escrow account. Your escrow account holds your homeowner's insurance and your property taxes. Okay, so those are three things that we have to come up with funds for. Now, some people say, 3.5%, 10%, 20%. Okay, so for the most part, for a single family home, you can pay anywhere from 3% to 5% if it's going to be owner occupied. Owner occupied means you're going to live in it. Okay, it's a primary residence. You're going to live in there. So conventional can go as low as 3%, which is actually lower than 3.5% with FHA. So FHA will allow 3.5% for 1 to 4 units. Conventional will allow 3 to 5% down for a single family. Okay. So now that's just the down payment. So let's look over here. So for a $150,000 home, 3.5% down is $5,250. Okay, that's only your down payment. If you are moving somewhere within the city of Chicago or the Chicagoland area, your closing costs can be anywhere from $7,000 to $12,000 just for closing costs. just depending on where you're staying, because your escrow account, depending on how much taxes you have, it can affect your escrow account. Okay, so it can be anywhere from $7,000 to $12,000. So in general, it costs about $20,000 to purchase a home in the Chicagoland area. Now, do most people pay that? Not necessarily, no. The reason being, they get probably some type of down payment assistance program that can help cover some of this 3.5% down. They might be able to get some closing cost credits from the seller. But let's do an exercise real quick. I want all of you guys to be sellers, okay? Everybody in this group is a seller. Now, I have two buyers. Buyer A is offering $240,000 for our house, okay? They are not asking for seller credit. Buyer B is offering $240,000, but they're asking for 3% back in seller credit, okay? So how much is that? 3% back in seller credit, $7,200. So they want $7,200 off our bottom line. Y'all tell me which buyer y'all want to pick. A, who's offering us they're offering the same amount, $240,000. A is not asking us for money. B is asking us for money. Which one we picking? Everybody's a seller today. Drop it in the chat. Who y'all picking? Okay, somebody said A. A. Okay. So it looks like for the most part, everybody's picking A. That's how it is out here, guys. If you have multiple buyers, right, that are looking to purchase your property, for the most part, they're offering around the same amount of money, but somebody is asking you for money off your bottom line and somebody else isn't, more than likely you're going to pick the person that's not asking you for extra funds, okay? So that's why it's imperative, guys, for people to try to save up as much of their own funds as possible. This is not the same market that it was in 2014 and 2015, where it was, a buyer's market and the sellers were throwing money at you to get out their house. It's not like that anymore. You're in a competition, okay? You have to be competitive, okay? So I want you guys to win, right? So in order to win, to be the most competitive, most of the time, most people's hindrances to buying a home is the cash, having enough money saved. Most people have jobs. Most people, have a decent debt to income where they can afford something, and then we go as low as a 580 credit score. So the most jarring piece of this is, do you have enough money for your down payment and closing costs? Like, we do have some down payment assistance programs available, but the down payment assistance programs, in this market with the interest rates going up, some of them have kind of suspended giving out funds because they're trying to wait for the market to kind of stabilize a little bit. So we had a few programs that aren't giving pricing right now, but we do still have other programs. But you have to also do, again, cost benefit analysis. Does this program make sense for me? Right. Okay, some programs, they require you to be in the home for a certain amount of time. Some of them have 5 to 10 year recaptures. What that means is you have to stay in the home for at least 5 to 10 years. If the interest rates drop again in, 4 years, 3 years, you have to pay that money back if you want to refinance. Mm-hmm. Okay, you have to pay that money back if you want to move. So you need to figure out what exactly is your plan. This is your life. This is your analysis that you have to we can help guide you. We can give you the options. I'll even run scenarios with you, but you got to kind of know where you want to go from here. Okay?
It's true. And, if I could just add one other thing to that too, Shavonna, is that, when you make a decision to go through this process, everyone just start thinking, you know what? I'm about to become a contagious saver and not an excessive spender. I mean, seriously, you got to flip the script when it comes to something that you desire. You have to implement a change so that you can run the race to get to the end goal, right? But if you keep doing some of the things the same, I mean, I had a client recently who likes to go to riverboat. I'm thinking, wait a second here. You're going to have to stop this gambling riverboat thing, because as soon as they're pulling your bank statements and they see you pulling out money at the riverboat and that you got the casino stuff all on there, that's a red flag. And I just told her, I said, you know what, just, you got to get past this point, make a decision that you're about to try to start saving your money. We not be going to riverboat trying to win some money, but you be losing a lot of money too. You think you just win. You don't always win. That thing is not built for you to walk out being a winner all the time. So you have to really weigh your pros and cons and make some constructive decisions about the sacrifices that you're willing to make. If you know that you can't walk into Marshall's without buying something, because yes, they see your Marshalls, then your TJ Maxx, and then your, I was about to say Zare. Most people don't even know what that is. That was so long ago. Oh my God. But any of those, all of those different things that's on there, if you see those things, they see those things on there, it look like you got a shopping problem. You never stay out the stores, right? So they're looking at a picture of who you are and what's important to you when you're out shopping for your property. And I just ask people, listen, let's be responsible during this season of you moving forward to obtain your goal, and put your best interests first. Listen, I got to tell some people, no, you want to borrow money? I'm sorry, not right now. I'm working on preparing for my phenomenal future in home ownership, right? You can keep speaking it into existence as you learn the power of saying no to things that are going to take away from you building your assets. And so do that for yourself. Say no to the riverboat casino. Say no to the shopping mall. Say no to these things so that you can save the money that is necessary. In addition to that, as Shavonna just broke off explaining, you know what, hey, sometimes people need $10,000, $15,000, $20,000 to buy a home. Now, she's right that in a lot of cases, we're able to layer some opportunities to lessen that cost for people, but don't bank on that. Go out now. If you know that this is something you want to do and you look in your bank account, you say, okay, it's a little on empty. Let's reverse how we can get it on full. Am I able to pick up some side jobs, some opportunities? Now, that's not going to help you with your pre-approval amount, but that will help you to be able to demonstrate where your money came from for your down payment, that you put up together a second job or you started to Uber to make some additional money for your closings, right? But they won't add that into your income because you didn't have it for was it like 2 years, Shavonna? I'm not sure if it's 2 years or not. That you have to have that second job for that to be counted?
Yeah. Mm-hmm.
Yep, 2 years. But the great thing about it, I've seen some people who are like, wait a minute, I want this home. I had a young lady just recently, like she had an attitude of gratitude through this process. And she was like, nothing's stopping me from getting me a 2-flat. And I mean, nothing. She went out in the middle of finding out what she was going to need. She immediately got approved for Uber. She didn't even have a car. She got an Uber car through them. And you get to pay a note on it, on the Uber car. She did that, made all the money and more that she needed to ensure her success. And guess what? She just closed on Friday. That was such a great victory day. And it did take her almost 2 months. And somehow she had grace and mercy on the seller's side to be patient as she walked through this divine process. Because when we found out that she needed more money because the interest rates went up, it was a whole bunch of other things that happened in between the time of her first starting. She said, no delay in my process. I will absolutely unequivocally do whatever is necessary to ensure my success, and I won't let nobody stop me. I'm going to go get this Uber car from them because she didn't have a car, and I'm going to take this and I'm going to build my finances. And she worked outside of her job and she came up with that money, and it was able to be used as her down payment money. And it worked out. Now, mind you, we were able to help her get $8,000 in grants, but it still wasn't enough for the multi-unit that she was purchasing. But she made it happen, because that's what happens when you have a made up mind. You know, and as we prepare, I know that the meeting ends at 7. I want to tell you that You're working with one of the finest organizations that really have a heart to serve in the community, to give back in a great way. They know that these statistics, especially amongst minority family members, and they want to see that 42% elevate and graduate and just grow tremendously to being able to match it with our other counterparts and be able to see the 79% of Black people owning wealth and how great of a feeling that is. So make sure that you connect with the HUD counselor. Keisha is amazing. They're growing their team. They're there to support you, and you can be transparent, be honest with them, tell them, because that's the only way they can fix it. So when they're ready to send you on to Shavonna and prepare you to the next step, you go to her looking clean as a whistle, like clean as Clorox, ready to rock and roll and get that house and be in order so that you can ensure your success. And if you run into a barrier, keep a positive state of mind about that process. Don't give up. Don't quit. Don't say, oh, I knew it wasn't this. I can't do this. And I'm tired of this. I'm tired of these people. Listen, ultimately, they got to check and make sure your stuff is in order because they're about to loan you some money. They want to make sure you got to pay them back, right? But keep a positive mind about it so that you can ensure that you are successful. Someone just wrote in the chat, what tips to get rid of student loan, websites or videos, programs. Shavonna, I'm gonna let you answer that, and then I want to answer that, and I know we got to get ready to close out soon, but.
Sure. So, wait, get rid of school debt websites, or?
She wants to know what are some tips of getting rid of your school debt? And then she's, I guess, asking for references. Are there websites, videos, or programs that we're aware of?
I'm not aware of any programs to get rid of school debt. I mean, other than paying them. So, I mean, other than like the forgiveness programs. Is that what you mean? Like the forgiveness for working in the public sector, like those type of programs? I'm not sure.
So it looks like what this person is asking about is what tips do you have to get rid of any student loan debt? So is there any websites they can go to, any programs, anything like that to get rid of student loan debt?
I have a few suggestions. The first thing I'm going to say, I'm throwing it in the chat right now. It's not a coincidence. In the 1960s, when we were fighting for so many years to prevent segregation from occurring, at the same time, a couple years right before, it was actually granted that we no longer could have schools segregated, that they were also simultaneously implementing student loan debt. You do your own history, you can see the dates and times. I think it's 1966 and then 1968 when it was actually done. But what I want to say is that, so I work with this organization, Action Network, to give my voice. I've written to President almost 8 or 9 times asking for student debt to be canceled out. So make your voice count. Don't just sit there and say, I don't like the student loan debt and it's unfair. Sign the petitions and be a part of that movement. That's number one. Number two is that when you work with your HUD counseling agency, a lot of times they would advise you to reach out. So if you work for a nonprofit organization, right, or if you participate in, it starts with the A, help me out. What's the name of that organization where people can go get a job for a year, and each year that you work with them, they help you to cancel out the debt? Starts with an A. It'll come to me. But nevertheless, reach out to your counselor so that they can give you some additional suggestions and opportunities. A lot of times, even as a realtor, I've gotten on the phone with some of the student debt people on the line and tried to get my clients into payment plans that were more affordable for them, and just different things that you can do. But first, let your voice count. I post this on Facebook. If I post a picture, I can get 400 likes on that picture. When I post this, asking people to take action, it takes less than a minute. Let your voice be heard about the unfair laws of student loan. I maybe get 1 or 2 likes. It makes no sense to me. We got to go out there and let our voice count in that. So please do make sure that you make an appointment with your HUD counseling agency, which is With My Turn to Own. Keisha and them, I'm sure that they have a lot of great ideas to help you, but also pick up the phone and call your student loan people and say, listen, what are my options? This is my situation, and write down the different scenarios. Maybe one of those will work for you. A lot of
Thank you
people
so
are
much.
eligible if they work for nonprofit organizations, depending on their length of time, to have them done. And there's other programs that you can participate in that would actually help you. So do some research. You can get that done as well.
Thank you, thank you, thank you for answering that question. I want to introduce our Chief of Staff here, Mr. Donamichi Davis. He is on the line with us.
Hey, Don.
Hey, what's going on, everybody? Listen, I'm not going to be that person that jumps on at the end and stays an extra 30 minutes. I know everybody has somewhere to be. Miss Wheatley, I just love and appreciate you so much. You have done such a great, oh my God, you have helped us. You have helped to mold us to be who we are. So I just want to say thank you, thank you, thank you so much. Ms. Hunt, I was able to sit and listen to the great information that you shared. Please make sure you drop your information in the inbox so our followers can get in contact and in touch with you. I did have a question, but what I'll do, I'll just hold off to it for next Wednesday. I want to thank my amazing team. I had a friend on here, Brittany Rogers. Hey, Brittany, I'm glad you jumped on as well. But also my team lead. I don't know. Is Miss Humphrey on the line? Miss Humphrey, Mr. Torres, everybody. I love you. I thank you all so much for the work we do every day.
Don, you looking like you the president right there, all sharp today.
Hey, don't do that.
You look like you're in the back of the car being taken care of, catered to. Look,
no, we had a look. Africa hide. Look, there go Africa. Right?
Africa, why are you hiding? Don't you dare hide.
We got
Stop it.
Podcast. We just left the podcast, and we in the car. I was like, man, we got to jump on this Zoom call.
I'm so glad you guys made it. And I do apologize. I got to jump off now because I got to get on a 7 o'clock that I'm running late for. My information is in the chat. You all, please do not hesitate to reach out to me. I will be one of your guest speakers on next week on My Turn to on Wednesday. So I'm super excited about sharing with you every single step that's going to be necessary for you to get to the finish line from the realtor's perspective. So I'm looking forward to seeing you all on next week. God bless you. Have an amazing, prosperous, positive rest of your week. God bless. Bye-bye.
Good night.
Shavana, good seeing you, girl. All right.
Good night. Thank you all for coming on. Good night.
Good night, everybody.